Hey everybody, welcome to week 11 of Own Your Life Live. Today we are going to go over one of the greatest tools that the financially free and wealthy use that the average do not, and that is taxes. Now I know taxes are not everyone's favorite subject, but in the average developed country around the world, the average person will pay between 30 to 50% of their income in the form of taxes over to a government. This could be payroll taxes, real estate taxes, estate taxes, income taxes. There are 30 to 50% taxes over your lifetime for the average person in a developed country. With a staggering statistic like that, although it's not the greatest subject in the world, it is very important to at least have a small understanding of how it works. So if you're the average person that's working the 8-hour, the 9-to-5 job, retiring at 65 years old, think about this for a second, and maybe it'll pique your interest to learn a little bit about taxes. If you're working 8 hours a day, about 2 to 3 hours of that day, you are working towards paying taxes to the government. That also equates to 3 to 4 months out of the year, that money is going to the government in the form of taxes. Over your working life, you're looking at working for 13 years for the government, paying them in the form of taxes. If you're okay with that, then there's no need to watch this video. There are some things that people can do to adjust their taxes, and we're going to go over those very, very basic things. Before I get into anything, I must make a disclaimer that I am not a CPA, I am not an accountant. Anything that I go over was simply taught to me, read out of books. And anything that interests you that you would like to apply in your own life, you need to hire and run by a professional CPA and accountant. It is a must. No matter what level you're at in your financial life, you should already have a CPA anyways, and make sure you run everything by them to check it out. So there's two main rules when it comes to taxes. Out of this book, Tax-Free Wealth. This is another book from Rich Dad, Poor Dad. It's in the Robert Kiyosaki series. I'm going to be covering some stuff out of this book. I'm also going to be covering a lot of information out of Robert Kiyosaki's book, The Cash Flow Quadrant. The rest of this series of Own Your Life Live, I'm going to be sharing books with you that I highly recommend. I can only touch the tip of the iceberg in a 10-minute video. So if this interests you, I highly recommend both those books. So the two main rules of taxes is rule number one is it is your money. Unless you live in a country that is ran by a dictatorship, what you earn, build, and acquire is yours. Taxes are not a full obligation to an extent. That money is yours, not the government's. And rule number two is tax laws are actually written to decrease taxes, not increase taxes. So tax law would be very, very complicated for the average person, me especially. I don't know how big it is, but I know that about 98% of it is written to actually decrease your taxes, not increase them. So you have this huge amount of tax laws that are written, and what it is, it's really a map on creating wealth. Since it's designed to decrease taxes, if you can understand the basics of the tax law, then it is more like a map towards you reaching financial freedom and decreasing your taxes. That's literally what it is designed for. All right, so before we dive head first in and start talking about tax laws, it's very important that we talk a little bit about what the cash flow quadrants are. Again, I shared the book with you, Cash Flow Quadrants from Robert Kiyosaki. Go check it out and read it. So it's made up of 4 parts here. So you have the left side. This is going to be E. E stands for employee. S is going to be small business or specialized. So an S is going to be someone, maybe a doctor running their own practice, a lawyer, a CPA with their own accounting firm, a small business, maybe it's a small restaurant that you work at. You have to be there. If you're not there, somewhat consistently, then business slows down. On the right side, you're going to have a B, which is a big business. A big business in the book is defined as a company that has 500 employees or more. This is a company that will run whether you are there or whether you're not. Not only run, but it should grow while you are not there. So that's going to be the big difference between the S and the B, the number of employees and the fact that one owner needs to be there and one does not. And then on the bottom right of the right side of the quadrant is I. I is going to stand for investor. So the reason why this is very important to understand is where you are on this quadrant is going to make a huge difference in the tax laws that are going to apply to you. I think the biggest difference and the main reason why I started Own Your Life Live was the difference between the left side and the right side is going to be a couple of things. It's going to be mindset, financial intelligence, and of course what this video is about is taxes. I think mindset, financial intelligence is what separates the left side from the right side. If you notice, an employee has to be at work. An S has to be at work more, maybe less frequently than an employee, but if he's not working the business, it's going to fade away. The left side of the quadrant definitely exchanges time for money. The B side of the quadrant does the opposite. They change money for time. A big business owner does not have to be there Monday morning if he chooses not to be. Business goes on as usual. He has employees that make sure business goes as usual. An investor does not have to be at the office on Monday. He has his money working hard for him. That is the biggest difference. If you get nothing else out of Own Your Life Live, it's the value of understanding this quadrant and determining which side of the quadrant ultimately do you want to be on. Now let's get back to taxes. There are different types of income. Most people are not aware of this, but different types of income is not equal. $100 to a B is not going to be taxed the same as $100 to an I. And never forget, it's not how much you make, it's how much you keep. So let's talk about these different types of income. Earned or ordinary income is definitely what you're receiving on the left side of the quadrant, especially as an E. This is going to be 30 to 50% in taxes. Portfolio income. This is going to be your stocks. It's going to be your bonds. It's getting some dividends. It's paper assets. Where do you think 90% of the people in America have their retirement set up? Right here. 401ks. Right here. This is going to be $15 to 25% income. It's a heck of a lot better than just ordinary earned income, and you can see the difference. My favorite, one rule, 2 words, cash flow. Passive income, aka residual income, is going to be your lowest taxed form of income, and you're not trading your time for money. This is going to fall under the 8, 0 to 15% rate. Now obviously there is a lot of details in between this video of what I'm shooting and why there's such a gap here. Again, you must have a CPA. You must learn about the basics of this stuff and go run it by a professional. On the cash flow quadrant, just to make this simple, the left side is typically going to be in that 30 to 50% range. The right side of the quadrant is going to be 0 to 25%. Now, when we're talking about acquiring wealth, we're talking about investing, building things that have cash flow. Do you think there's a massive difference in how much extra and additional income is going into the pockets of those on the left and the right side? Absolutely. So think about which quadrant you're in and think about which quadrant you would like to be in. And it all starts with mindset and financial education. Which is why I'm glad you're watching Own Your Life Live. All right, so to understand a little bit more about why tax laws are designed how they are, it's important to to go back. Governments learned a long time ago that they can get society to do the things that it needs done through the form of taxes. So let me give you an example. If a country wants population growth, if they want to increase the per child, per family ratio, then they can give a tax incentive for that. They have found out that it absolutely works. So there are certain things that society needs for us as a country or for a nation to sustain itself and grow. So the four main categories are going to be jobs, housing, agriculture, and energy. Those are the four main things that the government needs us to do, and it needs people to produce in order to grow, in order for the economy to keep going and to sustain a growing population. So let me ask you, do you believe that the tax laws are written to be equal for all of the quadrants? The answer is no, of course they're not. Unfortunately, as an employee, there is not a lot of control that you have over the amount that you pay in taxes. The tax law just was not written in the E's favor. So if you're serious about reducing your taxes, if you're serious about taking control, keeping more of your earned money in your pocket and less giving it to the government, then I would encourage you to consider becoming an entrepreneur and entertaining that side of your personality. If you have the money, I would also encourage becoming a professional investor. The reason why I say that is because the tax laws are written, you can look at it more like a stimulus package for entrepreneurs and for investors to invest and to produce the four main categories I just talked about. The big separation between the left side of the quadrant and the right side of the quadrant when it comes to tax law is we have producers and we have consumers. Producers and consumers of jobs, housing, agriculture, and energy. So looking at the quadrant, if you're an employee or a small business, if you're on this side, are you a consumer or are you a producer? Are you consuming jobs, food, housing, and energy? Or are you producing? So remember a B. A B is a big business with 500 employees. I would say that they are producing jobs, where an E is consuming jobs. And you can do the same down the line when it comes to housing. Investors are building the neighborhoods, building the low-income areas that the government needs, which is why they're getting a tax incentive and credit. So to slow it down, just remember, next time you see somebody being accused of not paying their fair share of taxes, they made millions of dollars and paid 0% or close to, instead of blaming him for not giving enough, I want you to acknowledge how much did that individual or business have to produce? How much did that person or business contribute to the needs of society in order for the government to legally allow him to pay next to no taxes? And the answer is he produced a heck of a lot more than the people that are pointing the finger consuming what society needs. That is the main difference. So that means, and I am going to say it, it is more patriotic to pay less in taxes than it is to pay more. Be a producer, not a consumer, and you will be rewarded in the form of taxes. All right, so the fastest way for the average person to increase their income is to decrease their taxes. In the last video, I invited you to consider joining us on your entrepreneurial side and consider maybe starting a business or becoming an investor. So on the business side of things, there's going to be lots of ways you can do that, but there's three main ones that I'm going to go over. To start a business, you could, one, quit your job, invest some money, and start a business, build a system, and go from there. So you're going to have a lot more risk. It's probably going to have a lot more startup costs. It's up to you if it's worth it. The second one would be also quit your job, But instead of investing in a business that doesn't already have a built system, maybe you could invest into a franchise. McDonald's being an obvious example, a Subway, are franchises that already have a system built and in place that you can invest into, plug in, and if you apply their system, you have a much higher chance of success. So there's probably a lot less risk there, still a lot of startup costs. And the third option for the average person that I talk to is continue to keep your job and maybe consider starting a home-based business. There's a whole lot of ways you can do that. You still keep the salary coming in from your job, but you get the tax benefits as long as the business, the home-based business, has an intent of earning more money. So let's go over a couple charts here and wrap up this segment. So this is going to be your traditional job, the E quadrant. Like we talked about, the E quadrant does not have a lot of tax laws written for its benefit. The biggest thing is you go to work, boom, you're taxed before that paycheck even gets in your hand. When you look at your pay stub, you can go down and see the taxes that have already been deducted. They got paid first, you got paid second. So it hits your income. You have your normal expenses, your cell phone, internet, car insurance, rent, all that kind of stuff. You are paying for every expense in your life with after-tax dollars. It's been taxed 30 to 50%, and then you go out and you buy, and whatever's left over is now in your pocket. Very, very little control. As a business owner, I got the B and the I down in the asset column here. These ones will run themselves. They are trading their money for time. Or you could be a small business. So I put two separate ones. Either way, the idea is the same. The money hits the income column. They have not been taxed yet. They have the same normal expenses as a normal employee. They have a cell phone. They've got internet, a portion of rent if you're a home-based business or an office, their car, their insurance. There's a lot of expenses that come with running a business. They pay those expenses pre-tax dollars. The money they spent on expenses, they're rewarded or paid back in the form of a tax deduction, which is going to skip over the tax section here. That doesn't mean they don't pay any taxes. That just means that expenses, the amount of money they paid on expenses is going to jump the taxes. They only pay taxes on what was left after their expenses there. This would be like the McDonald's, the Subway, or going investing in a big business and trying to build a system yourself. The way that typically works best for the average person out there with less risk and less money, like I said, would be keep your job and maybe consider starting a home-based business. As long as your home-based business, the purpose of it has to be to actually create more income, then there starts being tax benefits to that because you are legitimately running a business. So let's go over this. You're still in the E quadrant here with your job. You still get taxed up front on that check that you're used to getting as is. That goes into your income. But now as a small business, as a home-based business, you can acquire some more income from it. That is going to go into the income with your job. So you just increase your money. On top of that, these normal expenses that you may have, cell phone, internet, a portion of your rent, even mortgage, because a section of your house is now your office, your car, your insurance, the things that you're already paying for in your life anyways, with a home-based business, if it's in the legitimate pursuit of making more money, now those things become a deduction, which as an employee only, you do not get. So I want you to think about that. What are the things in your life that if you were a home-based business would now become a deduction on top of earning additional income? If you're serious and you want to increase your income and decrease your taxes without completely taking the risk of quitting your job and without having to invest a massive amount of money, there are a lot of ways that that can be done via a home-based business. Now, maybe your small business over time develops into a big business. Maybe you can get out of the E quadrant as you become a B. Maybe you keep your job as long as you would like, and you just supplement the income with your home-based business and supplement your income with the tax deductions you get. Jump over some taxes right there. Ladies and gentlemen, I highly, highly encourage you to take some sort of action to gain some control over the taxes that you are paying out. If you have any questions about starting a home-based business, I would love to talk with you about it. It's very easy to do, and it's something that I could personally help you with. If you have any questions, feel free to message me directly. Thank you very much for watching this episode, and I encourage you to consider becoming an entrepreneur so that you have control over your taxes. Thank you.